Here we have the 4-hour price chart for Palantir Technologies Incorporated, stock ticker PLTR. Here we can see that we are heading lower on the day. We can kind of zoom into this chart here and see that this is a big fat red candle. It's bearish in many ways. This just simply the size of it is substantial and significant. But we also have the fact that we're kind of closing below some prior support levels, and this is what would be considered to be a bearish engulfing pattern. It's a two-pattern candlestick formation where the initial trading period is positive, and we do see a green candle here. But then this is followed by a much larger red candle that engulfs the size of the prior trading period. So we can see that this absolutely fulfills the requirements that would be needed to call this a bearish engulfing pattern, trading pattern. And then in the process, we have broken through some support levels that were previously seen at 2730. All of that said, there could be some cause for concern here with people that are maybe in this stock a bit later in this price rally, in this current price rally that we're currently seeing right here. This could be a bit of cause for concern here, but what needs to be understood is that there's a major sell-off occurring in the market right now, and this selling pressure is being directed at the market as a whole, and specifically within the technology space as well. If we look at the Mag 7 stocks, I just finished videos on NVIDIA, Apple, Meta Platforms. I will do some other videos today. Broadcom. There are many stocks in the technology space that are falling victim to this downside selling pressure. And it is important to remember that this is not a Palantir specific story. I understand that many people, there's some, there's a lot of optimism that's being generated with this stock right now. We're starting to see more people cover it on YouTube. I think some of these people are watching my videos and then, kind of taking a cue about what to say about these stocks. But I don't think they've released videos early on in this sell off. I think they're waiting for me to post a video myself. But the overall implication here is that I do think that many of these people are kind of late to the party a bit. Got into this stock, started covering the stock a bit late. And then when you see a red day like this where there's selling pressure, there can start to be cause for concern. Overall, I would point to the fact that this stronger rally here, has only retraced to the downside a very small percentage of these gains. We really have not given back very much here, and we're still trading in an environment where major all-time highs have been broken in the process. So when you're seeing a strong rally like this, it's inevitable that you're going to have to see some corrective retracements at some point. If we simply look at the relative strength index here, we can see that we have been trading in overbought territory here for quite a while, for a bit of time here. Anything over 70s in the relative strength index is considered to be overbought territory. So seeing a decline here is not surprising, especially when you add to this the fact that there are broad selling pressures that are being seen throughout the technology space and the market as a whole. There was some inflation data earlier in the day today. The market did not respond to it favorably. I think a lot of that was already probably priced in. I don't think there was any significant positive surprise there. So the market has sold off in response. The S&P 500 as a whole is trading at elevated levels. The NASDAQ is trading at elevated levels. So at some point we're going to start to see some declines here. And it does look like this is going to be one of those red days. So going forward here, I would like to do some quick Fibonacci analysis, and we can look at some potential price zones here that can be used for some real-time trades. So currently, we can see, this is what I was saying earlier. We've only retraced a very small percentage of this move. I mean, this might feel like a red day for anybody that's long this stock, at these upper levels. Anybody that's kind of late to the game here. But overall, this is a very small retracement within the broader context. We have not even broken through the 23.6% Fibonacci retracement. So as we can see here, this red line here, we've got this 23.6 trading level, which also comes into contact with the prior highs that were posted on June 20th. And then in addition to that, we have this rising exponential moving average condition here, which would also be expected to bring support to prices here going forward. I would actually call this a fairly decent buy level soon. We're not quite there yet, but there are some signals here that are starting to develop, which do suggest that we could be nearing an end to these declines. So, what I really want to be saying here is, this is not the time to be exiting the position. It's really the time to start to play the other side of the market here. And there are some fairly significant levels that will be coming up relatively soon. Overall, we have not even retraced a quarter of this move, of this overall price move. I mean, there are some fairly significant declines that are being seen throughout the market, but these declines have been relatively minimal. And as you'll see here, we've already got a long wick on this red candle, which means that we're bouncing off of the lows. This is a fairly decent bounce because this is a 4-hour chart. Each candlestick period here represents a 4-hour trading period. So this is not a short-term trading chart. So the wick here is more significant. If we were to move down to the 5-minute chart, this would look like a much more significant bounce from these lows. So overall, I would expect to see some further declines here. I don't think that we're done with this sell-off. I think we're probably going to see a negative end to the week here within the broader market, and this is going to place some pressure on stocks that have been trading at elevated levels like this. And as we can see, Palantir is one example of that. This is a very strong rally here in a short period of time, and we have broken to all-time highs here. Um, I mean, I forgot to mention, we did post an all-time high today. This is an all-time high here, 28.59. So there are a lot of positive reasons on this chart, and it's not this is not real cause for concern here. We actually posted an all-time high today. I forgot to mention that. Overall, these price movements to the downside have been fairly weak given the broader context. The fact we are trading at all-time highs, the market as a whole is selling off. And I do think that if this decline continues, we will be trading into some fairly strong buy zones here relatively soon. There are a couple of indicators here that are lining up in positive territory, in addition to the fact that we do have a positive reading here in the relative strength index. We have rolled over out of overbought territory, but that's the type of thing that's to be expected. I mean, you reach overbought territory, it's time to, take some money off the table, and consider preparing for a possible corrective move lower. I do think that's what we're seeing currently, and this is not a stock specific story. So here's the current market analysis for Palantir Technologies Incorporated, stock ticker PLTR.